Hey traders, Raghee here, and in this free recap video I want to share with you a few things, some nuances to the next 24 hours or so in energies, namely crude and gas, gasoline as in RBOB. We'll talk about some natural gas as well. So one of the things that we're going to deal with today at 4:30 Eastern, and that's going to hit the market actually as I record this in about 4 minutes. But what happens at 4:30 Eastern is we get the API, or private inventory numbers. Now these are not published and they're private, but what they do is they set up the market for tomorrow's EIA number. So one of the first things that traders realize is by the time that EIA number comes out, we get the crude oil inventories tomorrow at 10:30 right here. Before this is the API, and the market is actually looking at what's going to happen based upon that API number, not whatever forecast you might have out there on crude. So let's refresh this page and see. So we'll get some estimates pretty darn soon, but what you're going to realize is the market's going to start to align according to the discount ahead of this EIA according to the API. So if the API number is a big number and tomorrow's crude oil inventories numbers misses the 2.7, right, misses this 2.7 estimate, this 2.7 actually doesn't mean anything to anybody. That's really what I'm trying to tell you. This doesn't mean anything to anybody. What's going to happen is whatever that API number is, whatever that number is, that's going to be what the market's going to play tomorrow at 10:30 against. So that's number one. That's the thing that screws a lot of traders up. It won't mess you up anymore. You know how the game is played. Number two, we want to think about the overall directional bias and or trend. Now you can have a bias and not actually have a trend. It's best to have both. I would like to have an overall assessment that the markets are heading higher based on any number of tools, but I would like my grab candles and my waves to confirm that there's a trend in place. And we do have a very shallow uptrend in place, much more shallow than the RBOB gasoline contract. So why is RBOB taking off? I think there's a couple reasons, but the one that I'm sticking with is one of the reasons that we'll see about this time of year every year. And that is we start to ramp up for the summer driving season. So there is a seasonal at play. Right, so there's a seasonal, and you'll hear this seasonal get talked a lot about, say, maybe in May. All of a sudden in May, everyone's going to start talking about the summer driving season, and too much of this move will already have been made. If you take a look at the historical seasonal composites for things like gasoline, they get going at the end of February. They start moving well in advance of when mainstream media is going to start talking about summer driving season. Now is the trade. Now is the seasonal. So now that I have a seasonal, I've got crude oil in an uptrend. I sure have gas in an uptrend. Now is the time to buy pullbacks. So the timing for this video for you all is basically, if we're going to get a pullback, if there's a volatility event that could create a pullback in either, in this case, gas or in crude, it's coming up tomorrow at 10:30. But remember, the first leg of that game happens at 4:30 Eastern on Tuesday as we get the private inventory numbers, and then we bounce those private inventory number expectations because that's what's going to get discounted into the market here shortly. That's what we compare the EIA results to, and that's how that game is played. Now we're going to have a similar thing happening in natural gas. Unlike crude and RBOB, natural gas is a short, and we've been short natural gas from that 880 level as we bounced up into the middle line of the 34 EMA wave. And so gas doesn't have any, gas does its own thing. Natural gas does its own thing, right? It's not a derivative of crude like diesel and heating oil and, RBOB obviously. So it's going to do its own thing. And there's a short here. There's a short going on right now. And it's a funny thing to look at the short because, rewind about 11 months, 10 months back from now, we were playing oversold bounces in natural gas awaiting some sort of deal between the U.S. and Mexico regarding UMSCA. So here we are now in a downtrend in that same zone, and this time I'm shorting, which is a quick reminder: market trends rule all. The market trend this time last year, choppy. The market trend this time this year, little choppy, but much more bearish, okay? So heads up, we've got the EIA API collision coming up. And let me see before I end this video if we've actually seen the volatility of the API hit crude. So you can see sometimes it's really volatile, gang. So let me see if it's actually hit. Oh, there it is. There it is. So if you wonder what's happening Tuesday at 4:30, that's API. And so the expectations are going to be built off this API number. The reason that it's going up is that private inventory data is showing a surprise draw. Okay, we were expecting a bit of a buildup. Nope, we got a draw, and that has sent crude up higher, which is great because we're long. But let's see what happens, because now that buildup in API, now you're going to start to see all the data come out, the headline number, distillates, gas, etc. And then that tomorrow is what the EIA is going to respond to. All right, gang, that is it for today. Hope this helps, especially for those of you wondering what the heck happens at 4:30 on Tuesdays for crude. That's what happens. I'll see you in the next update.